Most people look at the stock chart or a Bitcoin price and see a number. They think that number is a fact, but in the world of professional finance, that number is actually just an opinion that changes every millisecond. Welcome to TradingBits X. This channel is all about decoding the economy from the ground up. No noise, just signal. If you ever bought an asset only to watch it crash the next day, or if you had sat on the sideline while a too expensive stock doubled in value, you aren't alone. You are failing because you can't predict the future. You're failing because you don't understand the 4 invisible forces that dictate every price on the planet. Before we dive in, I want to hear from you. What was the last thing you bought where you felt like you paid too much, and why? What is it, a stock, a crypto coin, or maybe a car? Let me know in the comments below. I'm going to be responding for the best stories today. Price what you pay, value is what you get. Warren Buffett famously said, price is what you pay, value is what you get. It sounds simple, but 90% of retail investors treat them as the same thing. Think of price as the consensus of the crowd at this exact second. It's what you see on Yahoo Finances or your brokerage app. It's a snapshot. Value, on the other hand, is an intrinsic worth of the asset. If you're buying a business, the value is the total amount of cash that business will produce for you now until the end of time, discounting back to today. Here's the problem. Price is objective. It's a number, but value is subjective. Two people can look at Tesla. One see a car company, low value. One see an AI and robotic power horse, high value. Both are looking at the same price, but their calculation of value is so worlds apart. This gap, the value gap, is where millionaires are made. When price are minus to the value, it's equal to undervaluate, the buy zone. When prices are higher into the value, overvalue is the danger zone. As you value investor who looks for deals, or a growth investor who doesn't mind playing a high price for a bigger future. Type value or growth in the comments right now. I want to see the vibe of our community today. The imbalance, supply and demand. You heard it since Economic 101, supply and demand. But in the financial market, it's not just about how many units exist, it's about aggression. Price doesn't just move because there are more buyers than sellers. It moves when the buyers are more urgent than the sellers. Think about a concert. If there are 100 tickets and 1,000 people want them, the price skyrockets. That's supply constraint. In the stock market, supply is usually fixed, the number of shares, so price is driven almost entirely by the demand side. But here in the TradingBits X inside, supply and demand are driven by emotion. FOMO, fear of missing out, creates a massive spike in demand. Panic creates a massive flood of supply. When you see a parabolic move up, it's not because the company got 50% better on one day. It's because the ask side of the order book emptied out and buyers had to change the price higher. If you're finding this breakdown helpful so far, do me a huge favor and hit that like button. It tells the algorithm that finance education matters, and it helps us keep the lights here at TradingBits X. The discount mechanism. Expectation. This is the part that confuses everyone. Why does a company report record-breaking profits and then the stock price dropped 10%? It's because the market is a discount mechanism. The market doesn't care about what happened yesterday. It doesn't even care about what is happening right now. The market is trying to price what will happen 9 to 6 months in the future. If a company earns $1 billion, but the market is expecting them to earn $1.2 billion, that company failed in the eyes of price. This is why we say, buy the rumor, sell the news. By the time the good news is public, it's already priced in. If you are trading based on today's headlines, you are already too late. You are reacting to the past, while the smart money is already positioning for the next cycle. Be honest with me, have you ever been trapped by a good news announcement? You bought the stock because the news was great and immediately went down. Drop a yes in the comment if that happened to you. It's a rite of passage. The hidden force, liquidity. Finally, we have to talk about liquidity. If value is the soul of an asset, the supply and demand is the body, then liquidity is the blood. Liquidity is the ease which you can turn an asset into cash without moving the price. High liquidity, large capital stocks like Apple or Microsoft. You can sell $1 million worth and the price barely moves. Low liquidity, small caps, stocks, or specific real estate. If you try to sell them quickly, you have to take a massive haircut on the price. But there is a macro level to this. When the Federal Reserve print money, they are injecting liquidity. When there is more cash in the system, the cash has to go somewhere. It flows into stock, crypto, and houses. Price goes up simply because there is more money chasing a fixed amount of assets. This is why sometimes the economy can look terrible, but the stock markets keep hitting all-time high. It's not about value, it's about liquidity. There is simple too much cash with nowhere else to go. Let's bring it all together. To be a successful investor or trader, you have to ask 4 questions before you ever trade. Is the price significantly different from the value? Is the supply-demand balance shifting? What are the expectations for the future? Is there enough liquidity to support this move? If you can master these 4 pillars, you stop being a gambling and start being a strategist. If this video helped you to see the market a little bit more clearly, make sure to subscribe to TradingBits X. We're on a mission to bring institutional level financial literacy to everyone. We would love to have you in the community. Share this video with one friend who's still confused about why their stocks are moving. Now, understanding how assets are priced is the foundation, but most people start their journey with one specific type of asset, the stocks. But what are you actually buying? It's just a ticker symbol on a screen, or is it something more? In our next video, Stock Explaining, we're going to take this pricing theory and apply it to the world of liquidity. We'll talk about dividends, growth, and why owning a share is the most powerful wealth building tool in history. Click at the end of the video. If you enjoyed this content, please hit that like button and subscribe to TradingBits X. And remember, money, markets, we're trading the future. See you in the next one.